Great fortunes have been built
Yeah.
when there's blood in the streets in real estate, when cap rates have gone from 4 to 9, that kind of craziness. And it can happen. I've seen this movie so many times before. It just happens over and over again. And it's a cycle.
So Kevin, hey, thank you so much for being here. I really, really appreciate it. You guys in the audience, do your job and share the stream. And where do you think this economy is right now? They're saying that we're not in a recession. I believe that we are. They changed the definition of this thing. What do you see going on right now?
Yeah, it's very interesting. You bring up a good point. This is an unusual recession. Assuming the Fed does another 50 to 75 basis points, we're in the ninth inning on those rate hikes. So I think the market's starting to see that baked in. We're starting to see slowdown. We're certainly seeing slowdown in housing and in real estate and commercial real estate because the cost of borrowing money is going up. The CPI data is not very good in terms of how it reads housing. It uses too far a lagging index, it's not current. And that's been a bit of a problem. So we're probably rolling over on inflation a little bit.
You mean we're going the other way? We don't. The CPI numbers today suggested we're at 7%. You're saying you don't really trust that number in present time to be accurate?
No, I don't think it's 7%. My guess it's a little lower, which is why I think that the Fed is in the 8th or 9th inning of rate hikes. But they're going to make another rate hike anyways, just to get the insurance. In different markets, as you know well, because this is what you do, there's different dynamics in different markets, in multifamily, in apartments, in commercial, in single family dwellings. And there's all kinds of different markets, and there's different lending practices and different deals to be had. Right now here in Miami, I look at markets like New York, Boston, Miami, where I invest in real estate. The rental market is still very, very strong here. Here on Miami Beach, it's impossible to get a rental right now. And so prices are up from even the building I'm in right now. I track those prices daily. We're up about 8%. So over last year, just on rental rates, nothing. There's units for sale, but there's no correction on the downside in pricing yet. Demand in these locations, like on the beach or whatever, these special vacation properties, have still not corrected yet. But that's not the same for other areas, particularly commercial real estate. Cap rates are definitely going up in commercial real estate, as many of them have to be repurposed in terms of the use. So it's a mixed bag. Good managers, and I'll give you credit on this, Grant, because you've been doing this a long time, understand the arbitrage of opportunity. You're very good as an opportunist to find these arbitrage of pricing. You're right. There is a correction going on in institutional capital. There's no question that's changing. After riding the bull market for 27 years in real estate, they're reallocating assets to other sectors. Doesn't mean there isn't opportunity in real estate. I've always said this about real estate: location, 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 location.
Yeah.
When I buy into a building, or I buy a facility, or even commercial, I do a lot of time figuring out, is this the right location for the next 7 to 10 years? Because I'm going to be in that deal at least that long if it's cash flowing. And I practically never sell my real estate because I can't replace it, nor do I want to pay the capital gains on it. And it's cash flowing. I love cash flow. Everybody knows that about me.
So, but how much damage? If one group has 30,000 units with adjustables, that's just one group. I mean, I can give you 50 of these guys. How much damage happens? And where does you're not going to have enough buyers to grab this real estate. So the endowments...
Prices will correct. That's the whole point. I mean, the whole point is if you think that's going to happen, you don't buy anything right now. You wait for a gap down 10, 15, 20, 25%. Great fortunes have been built when there's blood in the streets in real estate, when cap rates have gone from 4 to 9, that kind of craziness. And it can happen. It depends how high rates go. And I've seen this movie so many times before. It just happens over and over again. And it's a cycle. It used to be 7-year cycles. We haven't had a cycle in 20 years.
Right. So, well, the last cycle basically killed the everyday person. This cycle could involve some of the biggest institutions in the world. You agree with that?
Yeah. Poo-poo happens, Grant. But I'll tell you, they're diversified. Most institutions, and I work for them in the indexing business, do not allow any position to be more than 20%. In other words, real estate's held at 20 very often. In addition, no one building is more than 5% of the portfolio's value. So, and they diversify themselves through geography and through country and through location, through class of asset. Look, it's going to be rough, but these guys are pretty good at it. There's a lot of, but they know they're big boys.
In this case, Kevin, they have, they got their hotel positions, office positions. They can't do anything in office because debt's 9% on an office building. We just bought one in Scottsdale, paid cash for it because the debt was terrible. They can't go to their hotel portfolio, so they're going to have to go sell the thing they don't want to sell, which is their apartments, which is a cash flow.
Yeah, well, I listen, if you're asking me, do I think there's going to be volatility in real estate pricing? 100%. If you're nimble and you have cash, as it sounds like you might, there'll be some great opportunities. I totally get that.
Well, what I'm saying to you,
that's how you have to operate.
What I'm saying to you is I'm not a coder or engineer or MIT grad, but what I did was 3 or 4 years ago, we started going crowdfunding to the regular everyday family, not the O'Learys and the Gates and all you rich people, everyday people, accredited and non-accredited, and saying, hey, you guys can invest in the same pool next to me in the same asset. I didn't go to the institutions and the Blackstones. My buddies were telling me, dude, just take your 100 million, go to Goldman, they'll give you $1 billion, do the deal. And I'm like, I don't want to do business with Goldman. I don't want them to put a gun to my head. Now, here we are. I'm probably going to be the only buyer at, in the building because all the institutions have the same problems of redemptions. What happens to the hundreds of companies, publicly traded companies that are zombies and have been for years?
They stay zombies. That's what happens.
Do they die in this cycle?
Well, it depends how much debt. It's all based on leverage. The cycles get cleansed through leverage. Leverage is always the culprit that takes the equity to zero. That's why I respect debt so much and why I abhor it in my own balance sheets is I don't use it very much. I don't like leverage. I don't use margin when I own equities. But the bottom line is you have to be prudent. And I think leverage, there'll be a cleansing because if you're borrowing money at 3%, you can really, it's not a problem. You're borrowing at 7%. Your costs have more than doubled. And I think a lot of that's going to be happening. If you're going to borrow money now for factoring or, for a small business, it's going to be, in some cases, double digit in terms of interest rates you're going to pay. And that's just the way it is. And that's the cycle we're in. And I think the economy will adjust. We're in a remarkable situation. People are now talking soft landing. Who knows? I would say, raise some cash here, stay nimble, be careful. Make sure you're diversified. That's what I'm doing. This is the standard advice for generations. I mean, this isn't anything new.
Do you think in your 65 years, by the way, I hope I look as good as you do when I'm your age. I got 10 or 15 years, but do you think, or can you remember a time when the Fed was ever successful managing inflation?
No.
I don't ever know. I don't know of one time in my lifetime where it ever worked.
Yeah, okay, that's true. But, there's always a first. And I don't know if this will be it. But so far, this has been a very perplexing, recession. I'm having a hard time hiring people, Grant, a really hard time. And that's never the case in a recession. So I'm not sure we're in one yet. I'm sure one's coming, maybe. Who knows?
You ever try paying more money, offering more money? Because that typically works for us.
Yeah, I get that, but my increases on my own operating company this year are the highest ever, just to retain talent. Ever. It's so competitive. So, telling me we're in a recession, I'm having a hard time buying it right now. So call me when we have a recession, please, because as far as I'm concerned, we're not in it yet.
One last thing. What advice would you give a small business owner right now to counter or take advantage or be opportunist so they become unbreakable?
Reduce leverage if you can. Number one, just if you have debt, try and pay it off a little more aggressively, making sure you're keeping an eye on the free cash flow. That's number one, and always been number one. Always ask yourself, where's the next incremental dollar coming from? Where's my next sale coming from? And I keep telling all my CEOs this.
Income.
A lot of them are consumer goods and service. Income. But It's this. Number one is the customer. Number two is the customer. Number three is the customer. You focus on the customer. You take care of the customer. They'll take care of you. Customers that believe they're being well serviced and taken care of are willing to pay more and stick longer than ones that don't. Take care of the customer. I keep telling everybody that I've been through this before many, many times. My companies that really were customer focused were the ones that survived.
Kevin O'Leary, thank you so much. Appreciate you, man. I hope this was a good warm-up for you for Congress.
You're worse than any congressman, Grant. Let me tell you.
Hey, I appreciate you, man. Good luck to you. Okay,
Bye-bye.
guys, that was Kevin O'Leary. This is Power Players, Cardone Zone. I try to interview some of the most interesting people on the planet. You guys on Twitter Spaces, thanks for joining me today. Maybe I'll come back and talk to you guys and get some feedback. Keep that open. Thanks for watching the Cardone Zone. Please subscribe to the channel and put below who you would like to see me interview. Thanks a lot.